Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Dick Matthews from Pardus FX with us today. He's here to talk about all things the market. And Dick, good to see you.
And you, looking well.
Thank you.
Bit colder over here than you are.
I bet it is. It always is this time of year. I'm sure you're a little gray and dreary, but hey, that's not what we want to talk about. We want to talk about what might be gray and dreary. Is you believe, now I want you to explain this, you believe the market is wrong. And I've as a trader, I've come to realize that the market's never wrong. So what do you mean by that?
Yeah, the market's never wrong, and I'm wrong thinking the market's wrong because it's the quickest way to lose money. So just stay out of the market, to be honest, until the market comes to start making sense. I thought that those non-farm payroll figures last week were really, really strong. I think you've had good PMIs out this week, and you're not heading for a recession as far as I can see. The States isn't heading for a recession yet, and the only way you're going to conquer inflation is by getting into a recession. So I think the Fed's going to be tougher and talk tough next week at the FOMC. You're going to get 50 basis points, I think, but I think that anyone who's looking for a dovish pivot are wrong, and you're going to get higher for longer. And I just think that I don't understand why the dollar has been weak. I understand it's pretty neutral now. And I think it could be a good time to start filling up the truck with a few dollars.
Yeah, it does feel like the market completely brushed off the jobs report, just looking ahead and saying, well, yeah, no, that was this month, or excuse me, last month. That's going to be in November's numbers. But and of course the numbers are going to look pretty good as far as jobs go, next month for holiday. But after that, we're going to start to see the jobs picture really weaken, and that's going to get the Fed's attention. So don't you think the market's just kind of looking ahead and assuming, yeah, the Fed chairman's probably going to be hawkish next month, but we don't care?
It just does feel like that, but they're making a hell of an assumption, aren't they?
Well, I think a lot of people believe that. I was going to say a lot of people believe that about the RBA last night. And they thought the RBA might be a little bit more dovish, and they were indeed actually quite hawkish.
Yeah, and I think that people are assuming and hoping, they're praying for a Fed pivot. Yeah, they want the Santa rally, want their Santa bonus. And I think they're just assuming that this is going to happen. I'm old enough to remember inflation, and inflation back in the 70s and 80s. It's a really stubborn thing. And I just have this awful feeling that the market is dreadfully wrong here, and the Fed will continue tightening. You're going to see terminal rate of 5, maybe 5.25 now. I think the stock market's wrong. I think bonds are wrong, and I think people should be buying the dollar.
Okay, so let me ask you how you're going to play this, because I remember talking last week. You were targeting the sterling up at the 124 level. We got dangerously close.
And you laughed when I said it.
I didn't think we'd get much above this the resistance, but we have gotten towards 124, but here we are really just holding above the 200-day moving average. What do you think that we should be doing? Should we be selling sterling here?
Yeah, I think so. I'd be looking to short it. Certainly if it got up towards 123, I'd get short. I'd be scaled up seller, looking for 117 initially. 117 and a bit, actually. 117 and a half to start with.
Somewhere right around here.
Yeah, right around there.
Yep.
And if it breaks that, I'm looking back down towards the 103 level.
Wow. So you think we're actually going to break down? You got to play the dollar long. So what does that mean for the euro dollar? I mean, the euro also, we've let me pull up the euro here. The euro, which was just up, but I want to get a cleaner look at it. So here's the euro. We're stair stepping higher. I mean, do you really want to stand in front of this train?
Yeah, I do.
You do.
I'm sure that the euro train's going to derail. Now, I remember I also said last week that cold weather was coming.
Yeah.
And I'm not the weather forecast. I'm going to turn up with a chicken on my shoulder talking about weather with a blonde wig on or anything, looking good. The weather's turning. We've had a very, very mild winter so far, which has kept our energy demand low. I think the weather's telling us a big cold front moving in. We call it the beast from the east over here. And I think that's going to affect energy prices, affect oil prices. Putin's going to squeeze again. He's talking about putting his retaliation to the energy, to the cap. I think you could see energy prices start coming up. So I'd be a buyer of oil, and I think that's going to hit inflation in Europe again. And you're gonna see a weaker euro.
So you think the euro is going to come down? Now I'm gonna agree with you. A blonde wig is not going to help you look much better.
No, I don't think so. It needs a lot more than that. No, but all joking aside, I do think that the weather's been benign, and everyone's forgotten energy and thought that's pretty good. I know at home my oil tank, I guarantee that it will run out this week. He's got a real cold snap coming. But I think you could see oil put back up a little bit as well, and inflation isn't going, and I still see higher rates here. And I think out of all the major central banks, the Fed is the most hawkish and the most committed to stamping it out.
Well, I think we would both agree that the Fed had been looked foolish at the beginning of this year, and has the Fed really seen, or have we really seen enough concrete evidence to suggest that the economy is ready to start weakening just yet? So
I'm not sure. I don't think we have. You're on the ground over there, but all the indicators I see that you haven't. And you're going to get some, as you say, some good employment figures. December's always quite a strong month. It might well mask some of the layoffs in the tech industry. I don't know. I just have a feeling in my old bones that the market's wrong on this, and I'd be a buyer of the dollar. And I think that the dollar is now pretty neutral in terms of overbought or oversold. So you might just see one last run up.
All right. Well, I think this it's going to be great, because if you are looking to trade ahead of the Fed next week, you got some levels to look at that Dick gave you to position yourself ahead of the FOMC. And Dick, it's you and I talk FX, but what do you do with your institutional clients, and what do you do over there at Pardus FX?
Just before I get onto that, also don't forget it's the Bank of England meeting next Thursday, and the ECB is meeting next Thursday. So it's a super central bank week. So the FOMC will obviously set the pace for things, but just be wary of Thursday as well. And we've got trade strikes in the UK, which will tend to make the market thinner, so you could get more volatility. I think trains are on strike on Tuesday, Wednesday, and Friday, which screws the whole week for us commuters coming into London. So
wow,
it could be takes liquidity out of the market a little bit.
That's interesting,
which could exaggerate moves. So just watch that. So apart from forecasting the weather and giving tips on how to commute into London to my clients, I talk to some high net worth individuals. Help them and advise them on moving their currencies when they're looking to buy assets overseas or repatriate funds into the UK, and also some industries and pension funds, and some funds as well. So look to help and guide people through the vagaries of the FX forest.
All right. Well, we appreciate you, and we appreciate you coming here to Trader FX. Trader Summit. Holy cow, where'd that come from? Trader Summit. We like that too. To come over here to Trader Summit and spend your time with us and educate traders, here in our community. So thank you so much, Dick. I hope you have a great remainder of your week. We'll see you next week.
Have a good week. Cheers. Bye.
Bye-bye.